Most people come into day trading thinking success is about finding the perfect strategy, the perfect indicator, or chasing the next hot setup. They spend months looking for a holy grail algorithm, thinking it's the key to the kingdom. But after blowing one account, then another, many traders finally realize something uncomfortable. The market doesn't destroy accounts, undisciplined behavior does. The market is just a mirror of your own psychological state. Today on Risk Premium, we're talking about the single most important skill in a day trader's journey. Discipline, not hype, not fleeting motivation. Discipline, the quiet, boring, and often unglamorous habit that separates consistent professionals from emotional gamblers. Discipline acts as your primary defense mechanism against the two most dangerous emotions in the trading arena, greed and fear. Without a rigid, disciplined framework, a trader is essentially a leaf in the wind, at the mercy of their own neurochemistry and dopamine spikes. When you are on a winning streak, greed begins to whisper in your ear, tempting you to ignore your predefined take-profit targets because the momentum looks too strong, or it might go higher. This is where discipline steps in to remind you that a gain is only realized once it hits the bank, not while it's floating in the market. Conversely, when a trade moves against you, fear takes the wheel. It triggers a survival instinct that makes you want to move your stop loss just a little further to avoid the psychological pain of admitting you were wrong. Without discipline, you turn a small, manageable loss into a catastrophic account destroyer. A disciplined trader, however, treats their trading plan not as a suggestion, but as a sacred contract signed with their future self. Take, for example, Ed Seykota, a pioneer of system trading who turned $5,000 into $15 million over 12 years. Seykota famously attributed his legendary success not to some supernatural ability to predict the future, but to his unwavering, almost robotic discipline in following his own rules. He understood that the market is a mirror. He once stated, "Everyone gets what they want from the market." He meant that those who lack discipline are subconsciously looking for the high of the gamble or the drama of a big loss. For the disciplined professional, the reward is consistent profit. For the undisciplined amateur, the only reward is the fleeting, expensive excitement of the gamble. By mastering discipline, you stop being a victim of the market's movements and start becoming a master of your own execution. The second pillar of discipline is the fundamental shift from being a guesser to being a professional. Most beginners enter the market with a gambler's mindset, treating price action like a trip to the casino where they hope for a lucky streak or a gut feeling to pay off. However, professional traders like the legendary Paul Tudor Jones treat the markets with the cold, calculated precision of a high-stakes business. Jones is world-renowned for his extreme discipline regarding capital preservation. He famously kept a sign on his desk that read, "Losers average losers," to remind himself never to add to a losing position, a trap that undisciplined traders fall into daily. Discipline is the engine that allows you to execute the exact same process 1,000 times without a single variation, regardless of whether you woke up feeling confident or anxious. It is the mental fortitude required to sit on your hands and do absolutely nothing when your specific setup isn't present. In the world of risk premium, we understand that no trade is often the most profitable trade you can make. This sense of boredom is actually the ultimate hallmark of a professional. If your trading feels like a thrilling roller coaster of highs and lows, you aren't trading, you're seeking entertainment. True professionalism means detaching your ego from the outcome of any single trade and focusing entirely on the quality of your execution. When you treat the market as a vocation rather than a hobby, you realize that your job isn't to be a prophet who predicts the next move. Your job is to be a disciplined manager of risk who waits for the market to meet your criteria. If you can't follow your own rules when the stakes are low, you will never have the discipline to handle the pressure when the stakes are high. Discipline is the only thing that allows the raw mathematics of your strategy to actually manifest in your bank account. You can possess a world-class strategy with a 60% or even 70% win rate, but if you lack the ironclad discipline to manage your risk to reward ratio, the math will eventually turn against you. This is the trader's paradox. The strategy is the map. But discipline is the fuel that moves you forward. Without it, you are a pilot with a flight plan, but no engines. Many traders sabotage their own edge by cutting flowers and watering weeds, having the lack of discipline to let a winning trade hit its target, while simultaneously lacking the courage to cut a losing trade when it hits their stop. Consider the approach of Mark Minervini, a multi-time U.S. investing champion. Minervini's success isn't built on luck or gut feelings. It is built on an almost obsessive discipline regarding specific entry points and, more importantly, strict stop losses. He doesn't hope a trade works, and he doesn't wait for one more candle to see if a price will bounce back. He has the discipline to exit the moment the market violates his criteria, period. By maintaining this rigid discipline, he ensures that his losses remain tiny and insignificant, while his disciplined winners pay for his lifestyle and fund his future. Minervini proves that successful trading isn't about the ego-driven need to be right about a stock's direction. It's about being mathematically sound. It's about understanding that a single undisciplined trade, where you let a small loss turn into a 40% drawdown, can wipe out months of disciplined gains. Discipline ensures that your losers stay in their cage, allowing your winners the room to breathe. In the end, the market doesn't pay you for your opinions. It pays you for your ability to stick to the math even when your heart is racing. Finally, it is crucial to understand that discipline is not an innate personality trait you're born with. It is a psychological muscle that must be built, strained, and strengthened through daily repetition and conscious effort. Much like physical training, the strength of your discipline is forged in the moments of greatest resistance. Every time you have the fortitude to shut down your terminal and walk away from the screen because you hit your daily loss limit, your discipline grows exponentially stronger. Every time you successfully pass on a FOMO trade, that tempting, high-speed move that doesn't actually fit your technical criteria, you're rewiring your brain for long-term wealth rather than short-term gratification. You are teaching your nervous system that you are in control, not the flashing green and red lights on the screen. This is the exact path followed by Linda Raschke, a veteran trader with over 40 years of experience, who is widely respected for her incredible work ethic and unwavering routine. Raschke has often emphasized that the market is a grueling marathon, not a frantic sprint. She treats her preparation with a level of seriousness that most amateurs reserve only for the trade itself. Her success isn't the result of one big hit, but rather the cumulative effect of 10,000 disciplined decisions made one after another. It takes true grit to show up every single day, perform the tedious prep work, follow the plan to the letter, and meticulously review your data at the end of the session, especially on the days when you don't feel like it, or after a frustrating loss. This behind-the-scenes discipline is what creates the risk premium edge. On your journey toward financial independence, discipline is the only bridge that exists between the trader you are today and the consistent, profitable professional you crave to become. You don't find consistency. You build it, one disciplined choice at a time. If you want to stop gambling and start compounding, it's time to stop looking for better indicators and start building better discipline. Remember, a mediocre strategy executed with perfect discipline will always outperform a perfect strategy executed with mediocre discipline. The indicators are just tools, but you are the craftsman. If you continue to chase the next big thing without mastering the person in the mirror, you're simply paying the market and ignorance tax that will eventually bankrupt you. If you found this breakdown helpful and you're ready to stop the cycle of revenge trading and emotional decision making, you found the right place. We are dedicated to helping you master the psychology, the math, and the ironclad risk management required to survive and thrive in these markets. Make sure to hit that subscribe button for Risk Premium and turn on the notification bell so you never miss a deep dive into the strategies that actually move the needle. We're here to help you navigate the noise, ignore the hype, and finally trade with a true professional edge.